we're welcoming the audience. First of all, I want to apologize to the audience. I'm going to take full responsibility for this. Dylan has been wanting to go live for the last 2 weeks. I have been out of the country, seeing a very important,
Shame on you.
seeing a very important person in a special country that will be said some talk about some other time. But right now, yes, we're back, folks, and I shouldn't have any other delays for the next little while. And we're going to jump right into it, folks. First of all, today is April 23rd, 2026. Now, over the last couple of weeks, what's happened is the VIX has dropped back down to below 20, and it looks like the market has kind of separated itself from the war in Iran. Now,
Or looking at it positively, one of the two.
positively positively that the market has made quite a rebound. We're at 7,100 roughly in the market after going all the way down to about 66 and change. So
Yeah, not that long ago.
yeah, go back to the missiles fly, time to buy. Da, 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 da. But we'll
Did
go
say
back
that,
to
didn't you? There were some missiles flying.
there were some missile flying, and it was time to buy in. But folks, I want
I don't know
to.
the exact day, but if you bought every time missiles flew,
I did
you
say start to
be
buy.
up a little bit.
Remember, I did say, hey, go back to the thing. I did say start to buy, and you keep buying on the low. But yeah, the VIX did, I think, quickly got up to over 30s, and now we're obviously in a calm environment. So in a way, that's good, assuming you bought, and hopefully you didn't sell. Never sell under panic. So now let's get into it. This is something where me and Dylan have made some serious money on these particular stocks. So for you who actually moolah, money, money,
I should have brought my
well,
I
make
got a
it.
big store
But
of cash. I should be throwing the $100 bill right now.
well, you know me, I'm a miser, so I'll be not making it rain, making it sprinkle.
You've been dropping pennies.
Dropping a drop of penny.
Making it rain, baby.
But I really want to give this up to Dylan because he's been chomping at the bit to talk about biotechs. We've got a few biotechs we want to talk about. We're going to kind of go off the cuff here, folks, and ones that are good, ones that are bad, ones that we own, and maybe some other stuff. Dylan, I'm going to let Dylan.
One that's
I'm going to
possibly
give you the floor.
upcoming that is looking pretty good.
Dylan, I'm going to give you the floor. Thank you so much.
Sure, absolutely. Yeah. So the first one is I think we talked briefly about Calcimimetica. Um, yeah, I even had a small position in them. I'm very concerned with their funding, and I don't know what their trial. It's not cancellation per se. It's a hold by the data safety people. No matter how much they say, there was no evidence of drug toxicity. If you just step back and you look at the fact that the company is struggling, they're losing money, and they have the data safety monitoring board canceled the trial. Just the raw numbers of them succeeding, getting FDA approval, are like 1 to 3%. This is really like not a bet I want to be involved in. Let's put it that way.
Yeah.
I don't know that at this point they're going to have a whole bunch of investors giving him money. Although biotech is having a bit of a comeback. If you look at the NBI, the Nasdaq index of biotech, it is doing pretty good. But I don't think that tide is enough to lift Calcimimetica. So I'm going to leave my position as a nominal position in Calcimimetica, and I do not recommend anyone buy that stock at this point because of their funding issues. If they do get some massive funding worked out, which I think is extremely unlikely, and they do have some good news, some good trial results, then I'm in my recommendation. But that I do not, and the market's agreeing with me. It's really kind of slowly drifting down, and yeah. So I learned this thing from Chris, where especially considering how volatile biotechs are, just hold on. It might spike up at some freak good news, and you dump at a nice profit, even though it's just a turd of a company, basically.
Well, let me tell you this, Dylan, and thank you so much for sharing that. And I will share a stock I did own, which Dylan was the one who brought it up. We're not going to put in the title, but we'll keep it in the body of it. Is Galt, Galactic Therapeutics, where I think I bought it at about a buck. No, 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 $2
Was
and
it in the two range
two
when we were
range. It
talking
was in the
about it?
two
And you got
range. Yeah,
involved
two 60 or 220. I can't remember, folks, but in the $2 range roughly, it had dropped all the way down to 90 cents, and then I could
in
have
the
sold.
80s because I
Yeah,
sold
oh,
at
80
87
cents. Yeah, yeah,
cents.
right. 80
I
cents.
sold them a low.
Yeah,
When the insiders are dumping, I was dumping too at 87 cents.
yeah,
For
yeah, yeah.
Christmas, actually.
Yeah, yeah, yeah. And sometimes it's better to just hold something than to completely give it up if you feel there may be some type of a catalyst event or because here's the other thing about cows, and this is a big thing that Dylan may not think about. You could have manipulators in that pumping it up because it's so lightly traded.
Yeah, it
Am
can
I
become
off? Am I
a
off
meme
on
stock.
anything?
Yeah,
Yeah.
yeah.
So on something like that where it's so lightly traded, you may want to keep it just in case the pumpers or powers that be,
Manipulators.
day traders, whatever, pump it up. But remember, you got to be paying attention because Dylan, you want to tell the story about how you're in a, you don't got to tell the story completely, but how you're a little bit busy and you missed out.
On you talking about Summit, that 15-minute time period?
Yeah, yeah,
Yeah.
right.
I was driving.
Yeah, yeah.
And I was looking for a short-term exit on Summit Therapeutics, my little pet stock, so to speak. Although I don't own any right now. Um, yeah, for 15 minutes it was, and my friend got out and didn't text me because he's that kind of a guy.
So the moral of the story is, if you're planning on doing that and you're planning on exiting a position with potentially a profit or at least making it even, please pay attention to the stock. Put it on.
Yeah, put alert on. You know, that's something I could have done as well. Yeah, I mean, I suppose I should look into alerts for these real volatile stocks, so that yeah, so find a good app that will send you an alert on the text when the stock goes crazy. Speaking of manipulation, I will add this into the body is you know, I don't know if you've been I watched the whole market. I don't know if how focused you are, but I don't know if you saw a stock car that just shot up
Mm-hmm,
8x in the last month.
mm-hmm, mm-hmm.
Yeah, to me, it's obvious manipulation. So I shorted just a nominal position, two shares, you know, just because I was like, there's 99.99% chance this thing is it's going down. And once the party's over, and sure enough, I got out of position. You know, my entry was 450 blended, you know, between the two. Two purchases were separate, and then my exit was I think around 260. So again, a nominal profit, but I was just like, because you don't want to do heavy on shorts. That's the main downside with shorts, is you have such a
Unlimited
unlimited
downside.
downside and a capped upside, basically, sort of the reverse of buying a stock. But, you know, I saw the money there, just some money laying around, basically, as far as I'm concerned. Just obvious manipulation. It's only a small amount of money because I can only do a small position. But if I was managing 100 million, I would have put a million in shorting it. You know, this is really a not. If you could find the shares to short, then yeah, you know, short it. This is a textbook pump and dump. So yeah, I can get good returns. But again, such small positions. Only worth mentioning that this manipulation, only bring that up because this is a real life example. Because the stock went from 100 a month ago, 2 days ago it was 800, and then today closed at 200, a little low 200s.
I see. Yeah,
So
and yeah, and I
I
think
think
that's
intrinsically changed with the company. Pure
yeah, yeah, and I think that's
manipulation.
something, and just I think I mentioned this at least once on the original Cal video, which has done very well, by the way. On the original Cal video, I wasn't interested in the stock because I wasn't sold exactly on management. I wasn't sold on just the insider ownership. I also don't remember a lot of experience with the management. I think
CEO
that
and
was
stuff.
the
Yeah, the
biggest
CEO
thing.
has a biotech fund experience. She's not actually a doctor or anything. Rachel
Right.
Levine.
Yeah,
Yeah.
I think again I'm going by memory here, but that's why I held off on that stock. But that's a really good it's really good to kind of talk about. Now, did you want anything else to talk about Cals or anything, or do
I
you
just want to
want
say
to go?
on at least in terms of my particular style. I mean, me and Chris have different styles. I think everyone has sort of their own exact style. For me, I am very used to just digging into a company and throwing it in the trash. It's just very I do like the idea where Buffett, says just pretend when you're investing that you have a little card and you have 20 options to invest, and that's all you get for this entire life. So think very carefully before you make an investment. And I like the mindset in that you should be looking a lot and not doing a lot of buying. I think that makes your probability of success to be greatly increased by that because like for example with Summit, I've seen other biotechs where they look good, but Summit was like checking every box, like experienced founder, check, cheap, check, put his money where his mouth is, check, short-term catalyst, they went going straight to phase 3 trials, check. And I was just like, nobody knows about it right now, check, because you want to buy when it's like crickets chirping.
100%.
So but before Summit, there was 1,000 other stocks. Maybe not 1,000, but 100 other stocks that I looked at, and maybe I did small little whatever. But I just was sort of like, for a year of just kind of looking, basically. Maybe some short-term moves, but nothing really substantial. So, anyways, that's how I think is a very good way to operate. I take that leaf out of Buffett's book. So, yeah.
Yeah. Yeah. And that's definitely something,
Can you keep your face a little bit away
oh,
from the camera?
my apologies,
Yeah,
my
yeah.
apologies. That's something, guys, that we really want it because I watch CNBC all the time. I don't think Dylan does, but I watch CNBC and Bloomberg all the time. We don't want to cover those stocks. There's no point. You've got $1 million budgets and women who look incredible and people with higher minds and us talking about that stuff. I don't think the audience really wants that very much. If you do, post a comment. But if you do want us to talk about Nvidia and all that, we can. But we want to get into the stocks where they're not talked about. Micro
Crickets.
cap, 10 baggers, man. I mean, this is
Yeah,
where
100 bagger territory.
and this is where I'm still
Nvidia is not going 10x or
as
100x.
as oh yes, okay, I'll even admit it. Since you went there, I even own Nvidia. I know that's not going to go 10x. I know that
There's a 0% chance.
yeah. There's basically 0% chance of it going 10x.
There's like a 1% chance that Calcematica could 10x.
Right.
There is a 0% chance that Nvidia is 10xing.
Absolutely.
In a short time frame.
You're right. And that's what our kind of main goal here, audience, is that we want to get you those nitty-gritty stocks, those smaller stocks that just aren't talked about, that have maybe the news isn't following them, but has the potential to be that one that can change your life, like a Summit. I mean, let me just tell you this. Okay, since I guess we're moving on to Summit, it's a nice segue into it. Even I own Summit, and I got in late, right? Because as you know, Dylan got in way before, which I wish I would have listened to him before. What
was the first time I told you about it? Was it still in the dollar range?
No, I think it was 3, wasn't it? It was.
Yeah,
Remember,
so,
did that little?
I know I bought in March of 2023. I think we started playing volleyball maybe a little bit before that, but we didn't really know we both liked investing.
Yeah, we didn't know we both like stocks, but it was.
Yeah,
let's just
we knew we liked traveling, but we hadn't gone to stocks yet.
Yeah. Let's just agree that it was below 5 or whatever.
Yeah, for sure below 5, because I remember we were chatting about investing, and of course I was so excited I brought it up because I was just thinking like, this is awesome. And I've had successes in the past, I'm pretty good at finding a winner in my opinion, although I don't have like a 50-year track record like Buffett. My track record is pretty good. Bitcoin early, a couple other ones. Yeah, I feel like I can smell a winner, so to speak. So I was excited. I was telling people about it, and I was even thinking about borrowing to getting a margin. Now with the manipulation of the stock, it wouldn't have done well. So glad I didn't, but it was yeah, I think I mentioned to you it was still like around $3 or $4 at that time.
Yeah.
I knew it was going to 16 with the Chinese FDA approval that year, so I didn't know, but I had basically priced in $15 to $17 what was what the market was gonna price it. You can see it's been in that range ever since, roughly. Obviously, it's gone up to 30, it's gone as low as 14, but 15
Yeah,
is sort of the bottom.
yeah, and to just bring that up, and that's kudos to you. You know what I mean? But I guess actually it's kind of ironic because now I own Summit. I don't think you own any.
I don't own any. Yeah, yeah,
I
no, no.
own it. He doesn't. So
More as a, honestly, I don't own Summit because I want to own more shares. As funny as that sounds, in my experience, as opposed to buying and holding, like avoiding the tax, because I don't buy it in a retirement account. I have just a regular brokerage account. I don't have a retirement account or anything, or a Roth or anything like that. It's just a taxable brokerage account. Um, I obviously the tax advantages of holding long term, long term capital gains and all that, capped at 15%, basically. Um, but I, from what I can tell, I make more than that tax difference doing the timing of the market, basically. And I'm not perfect, but I do better than just buy and hold, So
yeah, yeah,
it's worth it to me for the tax. That's to get through the short term tax gain, but yeah, I'm specifically not owning any Summit shares so that I can buy more before the Catalyst event later this year. So
yeah.
because
Mhm.
I feel very strongly it's going to have a dip down during some point this year. Maybe in the summer when it's a bit more of a sleepy time for the stock market or whatever. It does move a lot. So obviously it's exciting now and it's way pumped up, but I'm very patient. So
Yeah. Today, fourth, it was up down 9% today. I saw it.
yeah, it's very volatile.
Yeah,
So
very.
could
It's
easily be
very volatile.
down to the 15s in another month or two.
Yeah.
But this does not be a surprise to anybody who follows stock.
So okay, so basically, to kind of recap here, right? We're recapping.
Oh, by the way, just in terms of price prediction,
Right.
I think I said this earlier. November, assuming it gets FDA approval, it could be later in the year if it's delayed. I think there's like a 99% chance of getting FDA approval. They're just waiting for the overall survival data and Keytruda patent cliff. Everything's sort of lining up now. Um, anyways, I'm predicting 40 plus for the stock. So you can write that down. You don't have to trust me or whatever, but just judge me on our predictions. It will go, I'm thinking specifically 42 to 47, but so call it 45. But I
42 to
think
47 by what date? Sorry, Dylan, just want to get that again.
I don't have a hard date on it.
Oh, no hard date.
Early
Okay.
November, assuming there's an FDA approval. The market's going to price it in, going to eliminate the FDA risk once they get the FDA approval, and the price, the stock should go between 42 and 47.
So I
Now, I'm
think
not on a bet my life on that range, but that's my best guess, and it's going to go around there for sure.
so. Is it safe to
That's
say,
what I'm saying,
Dylan?
40 plus.
Is it safe
It
to
could be
say, Dylan?
Zurich, it could be on CNBC, all that pumps up the price. It could be at 60, or it could be a little negative time in the market. There's a lot of things that influence that, but 40 plus would be the 40 would be the minimum basically.
Well, let me tell you this. I think to kind of succinct it as much as I can, in case you want to split this up. Wait for the catalyst event. You're very bullish on the catalyst event in November. Is that fair statement?
Yes, I do think there's probably about a 25% chance that the FDA will delay or whatever. So I wouldn't say, buy options or any of this kind of thing. I would hold stock, like hold the stock so that if there's a delay on the FDA approval, Duggan, we'll get it FDA approved pretty much. I would say for sure. I would say you could bet a large sum of money on that. And I mean, he's certainly betting a large sum of money on that. A large chunk of his net worth and hundreds and hundreds of millions. Actually, over $1 billion at this point, of his own personal net worth. So he's I'll basically count on him to get FDA approval. He's already hiring all his his salespeople to whatever to really his mind right now, according to his hiring and stuff. He's hiring right now to start selling and distributing the drug once they get FDA approval. He's getting ready for that now so that next year they can hit the ground running.
Right.
So that they ramp up, Keytruda drops down, and then the year after next year, they're taking over the market basically is sort of what looks like his plan is.
So let me ask you this. you're not putting fresh money in it because I guess now your money's fresh money. What would you say our audience should, how do they play this?
Yeah, anywhere under 15 by later in the year.
Okay, fair enough. Thank you. No, that's a good soundbite.
It's pretty simple algorithm. If
Awesome.
price is under 15 and later in the year, then buy. How much your portfolio, whatever your risk appetite is, it's a volatile asset. So for me, I held it had a 40% drawdown. That didn't bother me. I'm a very high conviction buyer, like a diamond hands, sort of like a little bit memey. But I really like I was telling Chris, if Bitcoin went down to a penny, I would just buy more. Like I really don't care as long as the basic value proposition of Bitcoin is the same, then I would just buy more.
Did you
I
want to?
borrow money
You,
at that point.
well, let's not go into, but you want. I want to go into
I'm
range.
sorry, I was just
Yeah.
bringing that up
Oh
as a
yeah, yeah,
side
yeah,
thing,
yeah,
meaning
yeah, yeah.
like
No, I'm sorry.
I don't
You're
care
good.
about volatility. A lot of people do care about their portfolio dropping in value, even if it's only temporary, a day or a month.
Yeah, for sure. Okay, so to kind of recap, you have Cals, but you're looking to get out of it. You are somewhat bullish in November of Summit, but you want the audience and probably yourself to buy at sub 15 before the Catalyst event if it's available and hold it.
Yeah, and if it never goes below 15, in my mind, um, I mean, at that point, like I said earlier, anywhere under 30 in like October, September sort of time period, is a good buy as well. Once you're later and it's you don't need to hold the money for so long. Because if you buy now, you have to hold the money for a long time, so you get a lower yearly return. If you buy in September and you're getting a bounce in November or February, then you're getting, your money's working better, so to speak.
Fair enough. And then
Yeah.
price target is about 440 to 42.
45 is my
Oh,
exact price.
45. I don't know why I
But I'm
have
just saying
40 to
40
42.
plus because of
40 plus. I'm sorry.
yeah. I mean,
40 plus. I'm sorry.
Trump has a well-earned reputation for making the market volatile. So who knows who we'd be bombing at that point.
Oh boy, we gotta go. Well, should we go? We may have to go
Very hard to
to.
predict that. He'll be
We may have
bombing
to go to.
Yemen maybe in
Well, let me tell you
November.
this. Actually, you're right. Anything good.
Who fucking
Anything.
knows?
Well, it's a whole thing. I just might as well tell these this on camera. Dylan and I normally kind of avoid politics until we can actually go into the voting box, right? And then we bring it up because it does,
It
as much
affects
as we don't
things.
like it, it does affect your money,
It
So
does.
so maybe we'll do a podcast, but that's going to be a very risque podcast. So maybe I can't promise anything.
Well, as
We'll
long as
have
we
to
focus
mention it.
on, our audience making money on that,
Correct. It's going to be
then
money focused.
that's going to be, yeah, it's not like whether I like blue rather than red or whatever. Like, it's like, that's irrelevant. That's like another topic in my mind, another topic of like, I like ice cream or you like pie. Like, who cares? Why talk about it? It's
Absolutely.
irrelevant.
Yeah.
The point is like, is that going to affect your money is really I think the only important thing to talk about.
Absolutely. Now, I did want to, while we still have some time, talk about a stock do I have owned for a while, and that's Rain Therapeutics.
And that's something
And
I'm looking into as well. I don't know how to position in it.
yep, absolutely. I'll give you guys the ticker. The ticker is RNTX. That's RNTX. And what it essentially does is this drug is orphan pulmonary and fibrosis. Helps with this type of clinical diseases like those, and it's in its preliminary stages, right? It's very preliminary, so there's a
Very, very cheap, very illiquid.
very very much so.
And
Okay.
what? Oh, I'll let you finish before I
No, no,
ask
no,
you.
no, no. Go ahead, Dylan. I mean, I don't know if I
I
can
just want
answer
to
everything
say, do you want
right
to
off the
start by
top.
saying what percent probability would you say it has of getting FDA approval,
Ooh,
and what
great,
time frame are you thinking of?
excellent question. I think FDA approval is at over 75%. I'll tell you why.
Really? Wow.
I'll tell you why. You've got high institutional investor, 38 to 42% of institutional investors own this.
Oh, 40%, yeah.
Boss Capital owns 16%, has 16% share. Bios Equity Partners, pardon me, has 7%. University of Texas, okay, has a 6.2%, and Vanguard Group has a 4.2%. Okay. That's not also to also say that the CEO, I think his name is Brian Windsor, my hometown Windsor. But yeah, that's how I remembered him. Is Brian Windsor, that's his name. He has pretty small percentage of ownership. It's not huge. It's only 0.46%. However, he has major experience and has done this before. Okay.
Yeah, experienced. He has he gotten FDA approval? Do you know?
Ooh, good question. I don't want
I
to say
don't recall
something.
reading that in his bio or any of the homework I did.
Yeah, I it's a great question. I'm not 100% sure on that. But anyway, but back to why this is exciting. A lot of Wall Street uh projections right now we're at about a buck 81. I'm in at about buck 20, 25 or something like that. And I've been in since about September-ish.
You greedy capitalist.
Yeah, I know. And guess what? Wall Street analysts have this potentially going at over $10. That's a return of over 450%, right?
Yeah, if you're in a $1.20, that's massive. That's an eight bagger at least.
Yeah, yeah. So and I'm just gonna look at their cash burn position here because that's okay. So let me back up here. I don't know about Dylan, but I think Dylan looks at a lot of these principles. I always look at a few things. How is the drug? How competitive is it? What is their CEO like? Does he or she have big time success? How much skin in the game? And I learned this from Dylan. So thank you, Dylan. How much skin in the game does the CEO actually have? Right. Again, none of these are one game breaker. You don't have to have all, but the more of these cards you collect, the better it is. Right. Um, your cash burn clip, if I haven't said that. And for me, which is I think the biggest thing, is percentage of institutional ownership, the price they got in, and how good is that institution, and are they like biotech driven, or are they just Fidelity or whatever. If they're biotech driven that has a good propensity of picking good stocks and has a good track record, probably a little bit better than maybe a Vanguard who maybe just throwing money in there and not really paying attention to it. So you want to look at the companies that are inside. That's kind of my trick of the trade. I don't think Dylan. Well, I don't want to speak for Dylan. I don't know that Dylan cares about anything like that. But those are just a broad range of things that I look at.
So I have a question though. So
Mhm.
when Summit was, a dollar in the dollar range, they had recently failed their antibiotic. They own rights to an antibiotic that no one practically pays attention to, but they still own these rights to these drugs, this antibiotic that totally flopped before Duggan got involved and turned them into an oncology company. It's basically a brand new company under the same name. Got rid of everyone, virtually everyone who was on the old company, and hired new people. And it basically just got a ticker. Essentially, is what he got. It was a whole like a biotech ticker, and it just turned the whole company. Um, so at that time they had no analysts covering. The analysts had all dropped off, presumably with the failure of the trial on the middleizoma, whatever their bacterial, some sort of infectious disease, bacterial like antibiotic they were working on, and so there were no analysts and there were no significant institutional owners. I think Vanguard had a Vanguard, the big three, the Vanguard, the Fidelity, and BlackRock. They had a minuscule stake, and I guess they had slimmed down after because they had like a minuscule position. I think it was under 1%, 2%, something like that. So there's basically no institutional money in it at that time. Everyone had jumped ship. But as soon as Duggan got involved and put his money where his mouth is, and I looked at his track record, and I looked at the price of the stock, and I looked at the area they were addressing, to me, that was enough. But would you have waited, like for example, the Baker Bros are well-known biotech investors with phenomenal returns. They get it at 9, but I got in at 1.
Mhm.
Would you have waited till 9?
It would have depended. I mean, so a lot
Because at
of
9,
that,
it's way,
it's
way,
hard
way
to
sure
say
bet.
because then again, you have to look into the factor of how did I find the stock, right? I mean, did I find this on a Reddit? Do I know a doctor who is like doing this type of activity and or drug or ability to cure something I think is whatever. So the answer to your question is potentially yes, but I wouldn't put in a big position. I'd put in probably a
Okay.
smaller position. I'd
Wouldn't go
have less
all in like I
conviction.
did.
Yeah,
A
I would have a less conviction, right? So I do things that maybe I do things different than most people.
little bit more
Like
conservatively,
yeah, a
yeah.
little bit more conservative. So yes, to answer your question, would I have bought it? Yes, but I would have started off small, right? And then once the institutional money come in, then you go in big with the institutional money. You're following you're following the trend of the institutional money going in there, but doesn't mean you can't have some type of small position because look, just like rain, okay, I have a small position of whatever. If it goes up 10x and I put in 1,000 bucks, I'm still getting 10,000 bucks. I mean, yeah, it's not as good as if I put in 10,000 to get 800, but if it's still going up, think about it. If it's still trending up anyway, and you're going to make it up to 20, 30, 40, I'm okay with doubling my money. I don't have to find, like, not all, let me rephrase. We don't have much time up because I know we're on the 10-minute mark. So we may come up, but for me, not every one of my stocks, and this is where maybe Dylan and I just like maybe disagree on this. Not every one of my stocks has to be a 10 banger. I don't look for every stock I buy does not have to be a 10 banger,
Yeah, we
which
do
I don't think
differ.
that's
Yeah,
bad.
yeah,
You
yeah.
do follow what I'm saying?
I
Even
do.
if
Yeah, yeah.
even
We talked about this, I think, off camera, but yeah,
yeah,
so I have like, you know, I feel like it's possible to get a 10 bagger every year. And I know that's crazy talk for a lot of eh, I haven't actually gotten a 10x on my portfolio in 1 year. So I can't really speak from experience, but that's my sort of like mental like framework or whatever that I kind of come to. So I come to with the what the vast majority of people would consider unrealistic expectations. So when I look at Nvidia, it's not in my wheelhouse because there's 0% chance it's gonna 10x. When I look at Calcematica, I'm like, okay, did the market, and the market's very good. Well, the reason why I do biotech is not because I love biotech, although I think there's a lot of opportunity there. Because the market doesn't price biotechs very well. You can tell because of the volatility. Like the CEO leaves and then crash and it's like, oh, they got a new interim CEO. Like the company is still a company. Like the whole entire company didn't now go to like 70% off just because the CEO left. He doesn't bring that much value. Analytically looking at it fundamentally. So because it's very retail driven, and I mean it's institutional money, but the retail and traders tend to move the stock around for biotech a lot because they tend to be microcaps, thinly traded. The algos and the traders and all those can move those. Retail can move those. They can meme stock them pretty easily. Um, News can rechange the value. There's a lot of reasons that biotechs move a lot. So from my perspective, I feel like I do valuations better than the market. A lot of people don't think that, but I feel like I do. Um, so I'm looking for a mispriced
may
asset
I
that
ask
has.
you something?
Yeah, sure.
I'm sorry to interrupt, but other than biotech, do you see any other like 10x bagger? I know this is a really long conversation. We should have this another time, really, or
Yeah.
even in the next second video. Do you see any other sector where you can get as many 10 baggers?
No,
Okay,
no, I
fair
don't.
enough.
I
Okay,
mean,
go
I'm
ahead
sure
with
there
it.
are. Well, I'm not
Yeah.
sure there are. There may be with option plays with high probability bets, like an Nvidia or something like that. That may be in the like I was telling you with this Ford thing where Ford dipped down and this war is going to be over. I was like, I should have put my whole portfolio in that Ford calls because they
Yeah.
were so cheap. And I was like, all the stock has to do is go up $1 and I make 50% of my money. You know what I mean? Um, so So yeah, I mean, there's that on the table. Forward options are super inexpensive, and the stock does move. So, you know, there is a possibility for someone to, over the course of a year, make a really good return just trading forward stock. Theoretically, I don't think I'm that guy, but there's that possibility. Most of the time, you know, when you buy options, they're too expensive to really make money. But a few companies, Ford, and there's probably a few others, Apple and stuff like that, that have some predictability is probably the wrong word. It's coming to mind. They have some high probability events, maybe is a better way of saying it, coming that you can put some money into options. But you know, I'd say biotech is the easiest one that I'm aware of. It's the obvious one
Do you
that.
think there could be something hidden that we don't know? Like a sector that so for example, maybe something in foreign companies or anything
Yeah,
like
I've
that?
had a bad experience with foreign. I think I told you the various investments I've had, and I'm willing to go into foreign a little bit later, but right now I feel like when you simplify and just do the U.S., just do your circle of competence, your area of expertise, more of a rule of law here, despite what people might say. Try investing, stock in the Philippines or Bangladesh, and you'll see there's a big difference between that and the U.S. It's a pretty dramatic difference. It may have gone down in the U.S. That's a valid point of argument, but it is not worse than a lot of other countries. It is much better.
Okay. I like that analysis for sure. I like that.